So what could rising geopolitical tensions with Iran potentially mean for the markets? Katie Bays joins us now to discuss that. She is the co-founder of the research firm Sandhill Strategies. Katie, welcome. Nice to have you here.
Hi, thank you. It's so nice to be here. Thank you.
We have seen a lot of push and pull in the oil market based on the headline risk out of Iran. But how much of this saber rattling between the two countries do you think is priced into equities?
It's an excellent question, and the commodity market has certainly been volatile, so you would expect that the equity markets are looking at the commodity strip and wondering what to do with that. I think that's very true. The folks that we talk to in the investment community are looking at this geopolitical dynamic and kind of thinking, okay, let's just let this play out, hope it doesn't get any worse. And I just don't think that there is a lot of geopolitical risk priced into oil and gas producer equities at this point.
But as far as oil goes, I mean, we keep mentioning how the U.S. production that's increased in the last 5 years has changed the equation. When one analyst said the other day, and we quoted her as saying that she felt U.S. oil would be at $100 a barrel right now if it were not for U.S. production. What do you think?
Oh, I think that's very, very well put and just spot on. The trope that I always come back to is that ever since we discovered this shale oil phenomenon in the United States, the geopolitical risk premium in the oil market is just gone. That Middle Eastern dynamic is no longer what drives the day-to-day moves in the commodity price. It's really about what do you think that the U.S. shale producers are going to do next.
So what is an investor to do with all of this? I mean, on a daily basis, we're getting statements from the U.S. and Iran and the U.S. If you're an individual investor with a longer-term time horizon, what do you do?
Well, it's a great question. So, I mean, I think at the end of the day, folks have to recognize that there are still, most oil production is still done by national oil companies or majors that are working with national oil companies. There is a lot of geopolitical risk in the market, and there's these pockets of value in the United States that are worth pursuing. But to the extent that folks are wary about, this sort of lower for longer phenomenon driven by shale, it's good to maybe take a step back and recognize, the world needs oil as growth continues. There's going to be continued demand for energy, and geopolitical issues are largely sidelined right now. But as you've seen between the U.S. and Tehran, those issues can come surging back into the forefront at any moment.
Katie Bays with Sandhill Strategies. Katie, thank you.
Thank you.